It's good to see you. Kate, I begin with you. You take what is essentially a very personal look at short sellers. I'm wondering what you found as to how they're dealing with things in the wake of GameStop.
Thanks so much for having me, Scott. I think the most interesting thing that struck me while I was reporting, I was talking to Fahmi Kadir, who runs Softcat Capital, about a $50 million short-only hedge fund in the city. And she was saying, look, I understand what Gabe Plotkin from Melvin Capital and Steve Cohen, who are hiring security right now, are going through. They've been targets, of course, on Reddit over having been short GameStop, and some see that GameStop was a short squeeze intended for Plotkin and his fund. But she said, hey, I've been at this for a number of years too, and I'm in a position where I share my GPS coordinates with my lawyer when I travel for fear of my safety. And other shorts I talked to had incredible stories about the heat that they come under when they go after suspicions of corporate fraud or accounting gimmicks as part of their deep research to look into companies to go short. Now, some would draw a distinction between people who do that kind of focused research. We're talking about not just the people I mentioned, but the Jim Chanoses of the world, the Jim Carrutherses of the world, Mark Cahodas back in the day, who's retired now, and the folks who do long short. So short is just one part of the strategy, or the more small investors that are on platforms like Robinhood taking short positions. Very different approaches, but it is a tough type of trading no matter who you are.
Yeah, no, it's a really good read. Les, I mean, you obviously follow all sorts of different, fund managers. How was January overall for the business itself?
So what's remarkable is there were so many high-profile situations where people lost a lot of money in January, finding themselves on the other side of the trade that a lot of people on social media were really bidding up, in GameStop and AMC and so forth. But when you actually look at the average of what the entirety of the hedge fund industry put out in January, they actually provided gains, and they beat the S&P 500 and a well-tracked index of bonds, both government and corporate. And so you have to ask yourself, well, why is that? Well, part of the reason has to do with just tremendous dispersion among this volatility. You saw the winners win really, really, really big. Senvest is a name that we've mentioned. They posted gains of $700 million on GameStop alone. And then the losses were really steep. On the other side of that trade, of course, Melvin Capital, Kate just mentioned Gabe Plotkin, down 53% for the month of January. So when you actually average that out, you see on a fund-weighted basis, according to HFR, the gains were about 0.9% for the month. But that just goes kind of to the heart of what hedge funds do. They try to traverse in this volatility, and at the end of the day, you're going to see some winners and you're going to see some losers, and that's what happened in January.
I'm wondering, Kate, if look, I mean, being a short seller in a raging bull market and a long-running bull market is tough. I'm wondering, look, that's bad enough to have to deal with if you're a short seller. Do you think what we witnessed with GameStop is going to just change people's, interest in that strategy at all? I'm thinking of, Fahmi, as you wrote about, and investors like that just saying, you know what, I don't need this anymore. I don't need to worry about my own personal safety while I'm trying to do my work for investors.
Yeah, that's a great question, Scott. And that was actually the premise that I started the story with, because people like Mark Cahodas were saying this could be the death of the traditional sort of research-driven short seller. Cahodas retired a while ago. Jim Carruthers at Sophos Capital, still very much at it, but has apparently scaled back. Some people have left his firm, and he's doing less trading based on what I've read in Institutional Investor. Jim Chanos still very much at it. But, the people I talked to in the slightly younger generation, Fahmi Kadir, who's 30, or Nate Kopikar from Orso Partners in San Francisco, 33, they both said, we love this. We feel like it's an important service. We're willing to take the risks, as unnerving as it can be sometimes. I mean, Kopikar was trailed by a private detective into a bathroom in his own office building a few years ago. I mean, that's like how intense it can be sometimes. But yeah, I mean, Chanos said something to the effect that in this bull market, short sellers have been left for dead on the side of the road. I mean, you have Elon Musk, who makes the best performing stock of last year, of course, Tesla, but who makes a sport of making fun of short sellers and sells red shorts on his website, or was last year, with the Tesla logo just to poke fun at them. So joking aside, I think it's a hard thing to do technically and financially. And then when you have personal security threats, yeah, I think it probably has a lot of people rethinking the business. But again, those that I talk to say they love it and they're sticking with it.
Well, you better love it, right? It's tough, it's risky, it's unpopular. You have to deal with all of that. Leslie, I'll give you the last word. You can react to the same part of the conversation.
Yeah, I would agree with Kate. It's not a business for the faint of heart by any means. What's remarkable about the dialogue that's taken place in 2021 is the fact that, there's one thing to be just a short-only fund, like the names that Kate was mentioning, but a lot of the firms that were targeted in this social media volatility that we saw last month, they do long-short, and that's kind of the ethos of a hedge fund. I mean, if you're a long-only fund, typically you can't really charge the same kind of fees that you can if you're a long-short fund. So that kind of gets at the heart at what hedge funds do. Gabe Plotkin's Melvin Capital, they were a long-short fund. They went long some stocks, they went short some stocks. The ones that they were betting against happened to be the ones that a lot of people on social media wanted to drive up the price, and so they found themselves on the wrong side of the trade. But it kind of it speaks to this idea of just short selling as a whole. I don't know if there will be any regulations that really change the game on that front, but it's certainly an area to watch, especially as people decide, how they go about disclosing things in their 13Fs. They don't have to disclose short positions, but they do disclose options. They disclose put positions, and so that's something that the people on Reddit really targeted with these hedge funds.
Yeah. Appreciate the conversation very much. Leslie Picker, Kate Kelly. Appreciate it. We'll talk to you.